Record. Now next topic is commuted pension. Till now we have discussed the gratuity that is under section 10 clause 10. Now next is section 10 clause 10A. Section 10 clause 10A commuted pension. So pension, after retirement you will get certain sum of money. Either you are government employee or you are a private employee. You will get certain sum of money. Yes, but what do you mean by commuted pension? Commuted pension means what? Commuted pension means you are getting lump sum amount. Instead of getting pension amount in installment, if you opt for a lump sum amount, that becomes a commuted pension. Okay, so there is a provision of installment amount for certain year, then you can claim the lump sum amount. Like that also there is a provision. Yes. So now we need to see the computed pension meaning. See this. As per the terms of employment, the employee receives pension every month after his retirement from the service. Instead of such monthly pension, he can opt for lump sum amount known as commuted pension. As payment received as commuted pension by all categories of government employee is tax free. So similar to that of gratuity. In gratuity also what happens? Government employee no tax. But what about non-government employee? For non-government employee there is certain rules. So for gratuity, how among the three conditions least is exempt? Same thing here also certain conditions are given. See this. In the case of private employee, it is tax free to the extent of. So there are two cases. In the case of commuted pension, there are two cases. What are those? Suppose the non-government employee receives gratuity, and when the non-government employee not receiving the gratuity. One first is receives gratuity, second is when he is not receiving the gratuity. Yes. So now first we'll discuss see this condition. The commuted value of 1/3 of the pension received if he receives any gratuity. That means what? Suppose he receives gratuity 3 lakh. In that case, you should take 1/3 of the pension received. Yes, that too commuted value means what? Full value you should take. Full commuted value. Yes. Now, when gratuity is not received by an employee, in that case, commuted value of half of the pension should be taken in other case. Okay. So, where the employee commutes portion of the pension, the exemptable limit is calculated based on the full commuted value. So, what do you mean by this? Suppose the employee commutes half of the pension, then you should what? You should consider full commuted value. How to consider full commuted value? Full commuted value you can consider how? By taking the reciprocal. Suppose there is a 3 by 4 they have given. 3 by 4 is commuted. How to get the full value? Take the reciprocal. 3 by 4 reciprocal 4 by 3 like that. Like that we need to do. Yes. So if you see here commuted pension. So we discussed about pension. Pension means you are getting certain sum of money after retirement. Commutation means you are opting for lump sum payment. So there are two types. That is when employee receives gratuity. Second is when employee doesn't receive gratuity. What do you mean by employee? They are concerned about only non-government employee. What about government employee? They are tax free. Okay. So now my question is, if you see these two conditions, condition, among these two, under which there is more tax exemption, can you tell me? 1 by 3 or 1 by 2? Tax exemption is more in which case? Suppose employee receives gratuity, there is a less tax exemption. Why? Because see, 1 by 3 means,
by 3.
yeah, 1 by 3 means almost it is 33, isn't it? 33.33. Only 33.33% is exempt. Why? Because you receive gratuity, there it is already exempted, certain sum of money. If you don't receive gratuity, then 1 by 2. 1 by 2 means it is 50%. So there is a more taxation amount, that is more exemption amount in the case the person doesn't receive any gratuity. Yes. So now let us see this. Yes. Now you see commuted pension we have discussed till now. So now let us see the problem. Problem based on commuted pension. So simple problem, let us see. Bhavya retired from service on 31st March and received commuted pension of 1,60,000. Find out taxable commuted pension. If there are two cases, first if he is a recipient of gratuity, second if he is not a recipient of gratuity. So first case you should consider that he received gratuity, you should assume. Second case you should assume that he has not received gratuity. So Bhavya, let us assume that she is a non-government employee. Retired on 31st March, okay, that doesn't matter. So now how to calculate commuted pension? So first solution part, if gratuity is received, commuted pension format, particular and amount. First you write commuted pension received total. What is the commuted pension received total? 1,60,000. That you should write in the column of amount. Then less exempt under section 10 clause 10a for gratuity. It is exempt under section 10 clause 10. For commuted pension it is 10 clause 10a. Okay. Now whenever he is receiving the gratuity, you know 1/3 of the commuted pension. Less exempt under section 10 clause 10a, 1/3 of commuted pension, that is nothing but 1,60,000 into 1 by 3. 1 divided by 3, if you do 53,333. Yes, so this is the amount is exempt. This amount is exempt, but we want taxable amount. So how to get taxable amount? From commuted pension minus exemptable amount 53,333. You will get taxable commuted pension, that is 1,06,667. So that is for the first case, whenever he is receiving the gratuity. So now what about second case? Second case is if he doesn't receive any gratuity. In that case, commuted pension is 1,60,000. That is same for both the case. For first case as well as second case, commuted pension is same. If you see this in the question, only one commuted pension amount is given and not said that whether it is partly commuted, fully commuted, not mentioned. So we'll assume that it is fully commuted. Yes. So less exempt under section 10 clause 10a. Whenever he is not receiving the gratuity, what is the rule? 1/2. 1/2. When receiving the gratuity 1/3, you should remember this one. 1/3 when he receives the gratuity, 1/2 when he doesn't receive the gratuity. So 1/2 of the commuted pension. That is nothing but 1,60,000 into 1/2 or 50%. If you do, you will get 80,000. 80,000 is exempt. What about remaining? That is taxable. Remaining half is taxable. That is 80,000 is a taxable commuted pension. So very small problem. So any doubt regarding this particular problem, you can ask. Any doubt regarding this one problem about commuted pension? Any doubt? Anuj, Hanumanta, Narasimha, Pragati, Sharan, Shavya, Suraksha. See, can you tell me the rules for gratuity? Because last class we discussed about gratuity. Can anyone tell me the rules for gratuity again? Can you explain me gratuity again? Can Suraksha tell me? Narasimha?
Sir, okay, sir. So, non-government employee covered by this Gratuity Act 1972 were
Yeah.
covered by the Act.
Hmm.
The three conditions should be followed. That is, one is statutory limit is 20 lakhs,
Yes, correct. Hmm.
and then gratuity actually
Yes, gratuity actually
then
received is there. Yeah. Hmm.
15 then salary on the last drawn
Yes, that is.
salary for each completed year of
Yes,
service.
main condition under 1972 when is covered for non-government employee, that is 15 days salary based on last drawn salary. Yes, for each years of completed service or part thereof in excess of 6 months. So for not covered employee, that is half month salary based on average salary of last 10 months preceding the month of retirement for the each completed years of service. That is for not covered employee. Yes. Then other two statutory limit, there is a difference. For covered it is 20 lakh, for not covered it is 10 lakh, and actual gratuity received that is same. So for both the thing. So among these three, whatever is least you should exempt and remaining is taxable. That is for gratuity calculation. Commuted pension, there is again we have discussed now for gratuity. Whenever he receives gratuity 1/3, whenever he doesn't receive gratuity 1/2. So now let us see one more problem. Problem number 6. See this. Problem number 6. One retired on 31st December after serving 32 year 10 month and what 32 year 10 month. Okay. So now Bhuvan is an SSE. Okay. So 31st December retired. So whether 31st December is, that means 31st December retired means December month, whether it is included for gratuity calculation. First thing that you need to see whether December month is included for gratuity calculation. Can anyone tell me? Anuj, Sharan, whether December month is included for gratuity calculation?
No, sir.
No. Yes, answer is no, because month of retirement is not included. Okay. Gratuity received is given. He received 1,50,000 as gratuity. So that is given. He also commutes one half of this pension and receives 60,000. See, here they have said one half of the pension he commutes. So what about remaining half? Remaining half he receives in installment. Remaining half he receives in installment, and only the other half he receives in lump sum payment. But the commuted pension rule, if you see, that is based on full value of commuted pension. So half of the pension committed is 60,000. How to get full value? Do the reciprocal. That is 1/2. What is the reciprocal of 1/2? 2/1, isn't it? Reciprocal of 1/2 is 2/1. So 60,000 into 2. If you do, you will get full value of the committed pension. So what is the full value of the committed pension here? 1,20,000. Yes. His average salary for last 10 months was rupees 6,500. Okay. So here there is no need of average salary calculation. That is directly given in the problem. So that you can directly write. Whereas last drawn salary is 6,700. Okay. Here average salary is also given. Last drawn salary is also given. Compute taxable gratuity and taxable commuted pension. So you need to calculate both. But one more thing, you need to see here whether is covered or not covered under payment of gratuity. By seeing the question, can you tell me whether is covered or not covered under payment of gratuity act? Pragati, can you tell me whether is not covered or not covered? Yes, tell me. Shavya. See, by seeing the question, can you tell anything, any information, whether any information regarding the coverage under payment of Gratuity Act of 1972 is mentioned? They have not given. Whenever there is no information about covered or not covered, we'll assume that he is not covered. Unless and otherwise stated in the problem, we'll assume that he is not covered under payment of Gratuity Act. Okay. So now it is very clear. See this answer, since it was not stated in the problem, we have to assume that is not covered under payment of gratuity. So first thing we need to do is computation of taxable gratuity. Computation of taxable gratuity. So format we need to do particular and two amount columns. So gratuity received. What about gratuity received given in the problem? 1,50,000. So same thing you need to write in outer column 1,50,000. Less exempt under section 10 clause 10. For gratuity section is 10 clause 10. Least of the following. You know, among the three conditions, whatever is least, that is exempt. So first thing is nothing but same actual gratuity received, that is same 1,50,000. Statutory limit, since he is not covered, statutory limit is 10 lakh. If he is covered, statutory limit is 20 lakh. In this case, not covered, that is why 10 lakh. Third one. Third one condition is half month salary based on average salary of last 10 months preceding the month of retirement for each years of completed service. So here average salary is directly given in the question. No need to calculate again. See, this is the average salary for last 10 months was 6,500. So 6,500 you know now amount. Now on that 6,500 you need to take half. Why? Because we want a half month salary. See this in the condition itself it is given half month. That is why you need to divide by 2. 6,500 divided by 2 into completed years of service. Okay. If you see here 32 years 10 month they have mentioned. 32 years 10 month they have mentioned, but we need to take 32 years as completed years of service and remaining 10 month we should exclude. We should exclude because the E is not covered. When E is covered, in that case what happens? We should take 33 years because part thereof in excess of 6 months, because anything above 6 months we will treat as 1 year in the case of covered. In the case of not covered, whatever the fractional days or month is given, that we should not consider. Only completed year we should consider, because in the not covered they are not mentioned about part thereof in excess of 6 months in the condition. That is why 32 years. See this 32 we have taken into 32, 6,500 divided by 2 into 32, that is 1,04,000. So among these three condition, which is least is 1,04,000. So that you need to write in the outer column. So 1,04,000 is exempt. On 1,04,000 there is no tax payable. But what is the question? Question is we want taxable gratuity. So how to get taxable gratuity? That is from gratuity received you should deduct exemptable amount. That is 1,50,000 minus 1,04,000. You will get 46,000. So that is our taxable gratuity. On 46,000 there is tax. Yes. So now one calculation is over. After that we need to do the calculation for computation of taxable commuted pension. How to do the computation of taxable commuted pension? You need to do the format, particulars and amount column. So under particular you write commuted pension received, whether it is given in the problem. See this, commuted pension received given in the problem is 60,000. So same thing you need to write in the outer column, 60,000 less exempt under section 10 plus 10a. For gratuity it is 10 plus 10. For commuted pension it is 10 plus 10a. That is why next thing after this you need to see whether he receives gratuity or not. In this question specifically it is given he receives gratuity. Whenever he receives gratuity, what is the rule? 1 by 3. 1 by 3 of the full value, very important, not half of the value, full value of the commuted pension. So 60,000 is half value. Reciprocal if you do 1 by 2, reciprocal 2 by 1. So 60,000 into 2 you will do 1,20,000 you will get. On 1,20,000 you take 1 by 3. 1,20,000 into 1 divided by 3 if you do, you will get 40,000. 40,000 is exempted amount. On 40,000 there is no tax. So we want taxable commuted pension. That is 60,000 minus 40,000. If you do from pension received you deduct exemptable amount, you will get taxable commuted pension as 20,000. Yes, see this exemptable commuted pension is calculated based on full commuted value. That is note is given in the problem. So whether this is clear, any doubt regarding this one, commuted pension? Any doubt regarding this problem? You can ask now, unmute yourself and you can ask or you can comment in the chat box also. No, Narasimha is saying no. What about others? Anu, Hanumanta, Prakati, Sharan, Shavya, Suraksha? Why you all are not responding? Yes, tell me.